Euro to US dollar is trapped at 1.1409 and the ECB is about to spring the cage. Less than 5% chance of a hike today, but Lagarde's words will move this pair 50 pips in seconds. The danger? A dovish hold that crashes euro toward 1.1330. The opportunity? Hawkish guidance that sends it screaming to 1.1500. Euro to US dollar is trading at 1.1409 and the entire market is frozen. The ECB decision is hours away, and less than 5% of the market expects a rate hike today. But here is the thing, the decision itself is not the trade. The press conference is. And right now, there is one danger zone and one hidden opportunity. I will show you both. The euro has been consolidating in a tight range for days. The daily trend is strong sell. The weekly trend is strong sell. The 4-hour trend is strong sell. But the 1-hour trend just flipped to neutral, and that tells me one thing, the market is waiting. Waiting for Christine Lagarde. Waiting for the clues about September. Waiting for the headline that flips everything. Stay to the end. I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the 1 headline that changes the entire structure. Let me declare the session bias right now, range bound with a bearish tilt, but that changes the moment Lagarde speaks. The single invalidation level that flips the bias is 1.1460 on the 4-hour close. Write this number down. If we break above 1.1460 today with a confirmed 4-hour candle close, the entire bearish structure resets and we target 1.1560, but here is where the herd is positioned. Retail traders are long. They have been buying every dip into 1.1400 expecting a hawkish surprise. And that is exactly what makes this dangerous. According to ING, the EUR USD 2-year swap rate differential has tightened by around 25 basis points since the early July military escalation in the Gulf. That has given the euro some support, but ING also flags a retest of the June low near 1.1330 as a near-term risk. The smart money is waiting for the press conference. The retail herd is positioned for a rally. And when retail is this exposed, the market tends to hunt those stops. Just this morning, Scotiabank highlighted that the euro is trading quietly against the dollar in a tight low 1.14 range, with limited reaction to stronger ZEW sentiment data. That tells me the market is completely focused on one thing and one thing only, the ECB. Let us read the chart from the top down. Starting with the monthly time frame. Reuters analysis shows the euro has been contained between the 100-month and 200-month moving averages since April 2025. Range breaks were attempted in May 2025 and January 2026. Both failed to hold. A break lower from this range targets 1.0940. A break above the 200-month moving average targets 1.2084. That is the big picture. On the weekly chart, the trend is strong sell. Price is trading below the MA20 at 1.1437, the MA50 at 1.1490, the MA100 at 1.1557, and the MA200 at 1.1553. That is a clean bearish stack. The RSI on the weekly is below 50. Momentum is firmly to the downside. Now the daily chart. Price is at 1.1409. Below the MA5 at 1.1415 and the MA10 at 1.1419. The MACD is negative at minus 0.003. The RSI is at 43.547, below the neutral 50 mark, consistent with bearish momentum. The Williams %R is at minus 69.524, approaching oversold but not quite there. The ADX is at 22.794. Which tells me trend strength is moderate, not strong enough for a major breakout, but enough to keep pressure on the downside. Now the 4-hour chart. This is where it gets interesting. The pair is trading within a triangle pattern, with the bulls defending the demand zone around 1.1400. The rising trend line from the previous decline is acting as support. First resistance is 1.1421, then 1.1429, then 1.1441. First support is 1.1397, then 1.1389, then 1.1377. But the real levels to watch are 1.1380 on the downside and 1.1440 on the upside. Above 1.1460, recovery momentum improves. Below 1.1385, bearish pressure strengthens again. Here is what most traders miss. The 1-hour chart just flipped to neutral. That is a massive tell. When the 4-hour and daily are strong sell but the 1-hour is neutral, it means the selling pressure has paused. The market is coiling. And coiled markets explode. The Bollinger Bands are narrowing, which is classic pre-breakout price action. Volatility is declining, and price is moving sideways. That means we are approaching another decision point. Now let me bring in a fresh insight from the search I just ran. According to Forex.com senior market analyst Michael Botris, the euro is trading above pivotal support for a 5th consecutive week with the July range intact heading into the ECB. Battle lines are drawn. The key question is whether that support holds or breaks. Let us connect the news to the price action. The ECB is expected to hold the deposit rate at 2.25% today. Markets are pricing less than a 5% chance of a hike. The June hike was largely driven by higher energy prices and felt more like an insurance move than the start of a tightening cycle. But here is the catch. A September hike is almost fully priced in. And with oil prices elevated due to the US-Iran conflict, the ECB may have no choice but to keep that option firmly on the table. According to Bloomberg, the ECB is staying on war alert preparing for the next rate hike. The central bank is likely to hold off on a second rate hike this week while keeping that option open for September. The policy divergence narrative is the key driver here. The Fed meets July 29th to 30th, with markets pricing a hold. But the Fed's narrative remains hawkish. As ING noted, a less dovish than feared Federal Reserve Chair Kevin Warsh has turned global market sentiment more hawkish. That puts the dollar in a stronger position relative to the euro, now the cross-asset linkage. The US dollar index is holding above 101, maintaining its medium-term uptrend. The 2-year euro swap rate has hit fresh highs despite Brent oil. Trading below $100, driven by a recovering growth outlook and a more hawkish assessment of central bank policy. But the problem for the euro is this: even at the peak of the oil rally, markets proved reluctant to price the ECB deposit rate above 2.75% by year-end. That suggests further oil rallies may provide diminishing support for euro to US dollar through the rate channel and exert greater pressure via the energy and risk sentiment story. What is the 1 to 2 week directional lean? Bearish below 1.1440, bullish above 1.1460. The event that invalidates the bearish bias is a clean 4-hour close above 1.1460. The event that confirms it is a break below 1.1380. Do you think the dollar breaks 105 this week? Comment yes or no in the comments. I am tracking consensus. Most people skip this section. That is exactly where the money is made. Keep watching. Strategy 1. The opening scalp. This is a high probability scalp targeting the first move after the ECB press conference. The setup focuses on the 5-minute chart trigger right at a key intraday level. Here is the exact trigger condition. If price sweeps down into intraday support at 1.1380 and immediately prints a bullish engulfing candle on the 5-minute time frame, you enter long. The stop loss goes below 1.1365. Exactly 15 pips below entry. Take profit 1 is at 1.1420, giving you a 40 pip target with a risk reward of approximately 1 to 2.6. If momentum extends, you can trail stops and aim for 1.1440 as a secondary target. What instantly voids this? Scalp. If the 5-minute candle closes below 1.1375, the setup is invalid. Do not chase it. Wait for the next opportunity. The opening scalp, entry, 1.1380, 5M bullish engulfing after the tap, stop loss, 1.1365 take profit 1, 1.1420 take profit 2, 1.1440, trail stops, risk, reward, 1 minute and 2.6 seconds to TP1 invalidation. Void if 5M candle closes below 1.1375. Strategy 2. The liquidity GRA. This is the counternoise scalp. The market is going to hunt stops. It always does before a major event. Here is where those stops are sitting, just above the recent swing high at 1.1440 and just below the recent swing low at 1.1380. The setup on the 15-minute chart is simple. If price spikes rapidly toward the 1.1440 to 1.1450 ceiling ahead of the ECB release and stalls, you enter a short. The stop loss goes above 1.1465. Take profit is at 1.1395. That is a 50 pip target with a 20 pip stop, giving you a 1 to 2.5 risk reward. Alternatively, if price spikes down to 1.1380 and rejects, you can enter long with a stop below 1.1365 and target 1.1420. The warning here, this requires fast execution. The liquidity grab happens in seconds. You need to be watching the 1-minute and 5-minute charts for the rejection signal. A long wick above 1.1440 or below 1.1380 is your confirmation. The liquidity grab entry, 1.1440 to 1.1450 rejection, 15M bearish reversal, stop loss, 1.1465 take profit 1, 1.1395 risk, reward, 1:2.5 invalidation, void if 15M candle closes above 1.1460 the liquidity grab, alternative, entry, 1.1380 rejection, 15M bullish, reversal, stop loss, 1.1365 take profit 1, 1.1420 risk, reward, 1:2.0 invalidation, void if 15M candle closes below 1.1375. Are you scalping or swinging this week? Comment scalp or swing in the comments. I want to see where this community sits. Strategy 3. The session SWN. This is the multi-day hold based on the 4-hour and daily bias. The entry condition is clear. A 4-hour candle close above the 60-period moving average with a bullish MACD cross. Currently, that level sits around 1.1435. The trigger is simple. If we get a confirmed 4-hour close above 1.1460, enter long. The stop loss goes below the daily structure at 1.1390. That is a 70 pip stop. Take profit 1 is at 1.1560. Which is a 100 pip target with a risk reward of approximately 1 to 1.4. Take profit 2 is at 1.1620, giving you a 160 pip move and a risk reward of 1 to 2.3 for the short side. If price breaks below the major trendline support at 1.1355 with a confirmed 4-hour close, enter short. Stop loss at 1.1415. Take profit 1 at 1.1220. Take profit 2 at 1.1150. The trailing stop rule is critical. Once price reaches halfway to TP1, move your stop to break even. At TP1, trail stops to lock in profit and let the second half run to TP2. The explicit invalidation level that shifts the medium-term outlook is a daily close below 1.1300 for longs or above 1.1500 for shorts. The session swing, long, entry, 1.1460. For H close above 60 MA with bullish MACD cross, stop loss. 1.1390 take profit 1, 1.1560 take profit 2, 1.1620 risk, reward, 1 minute and 1.4 seconds to TP1. 1 minute and 2.3 seconds to TP2 invalidation, void if daily close below 1.1300. The session swing, short, entry, 1.1355. For H close below trendline support, stop loss, 1.1415 take profit 1, 1.1220 take profit 2, 1.1150 risk, reward, 1 minute and 1.9 seconds to TP1, 1 minute and 2.9 seconds to TP2 invalidation, void if daily close above 1.1500. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. Consider 0.5% on the opening scalp and liquidity grab. No positions through high-impact news unless you have a clear trigger and a hard stop. Stops are non-negotiable. This is how you survive to trade the next big move. Remember, the ECB press conference can cause spreads to widen and slippage to increase. Size down, protect your capital, and live to trade another day. Let me summarize the single most critical level for the next session. That level is 1.1380. If we break below 1.1380 with conviction, the next stop is 1.1330, then 1.1220. If we hold above 1.1380 and break 1.1440, we are heading to 1.1500 and beyond. The ECB press conference is the catalyst that determines which path we take. Here is what I am watching for tomorrow. If Lagarde sounds hawkish and signals a September hike, the euro could rally hard. But if she sounds dovish or expresses concern about growth and energy costs, the euro could collapse through 1.1380. If this level breaks, the whole monthly trend flips. I will have the updated blueprint 24 hours from now if you want the full breakdown on trading commodities, Aussie, Japanese yen, euro, dollars and Bitcoin. The videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.